Meantime, Nvidia bouncing higher today, up more than 5%. The stock closing out the week with an 8% gain, making it the only Mag 7 stock up this week. Still, the AI darling is down more than 20% from its 52-week high. And next week, the company hosts its GTC conference in San Jose with a keynote from CEO Jensen Huang Tuesday and a quantum day on Thursday. Analysts looking for updates on Nvidia's Blackwell Ultra and next-gen Rubin chips, as well as demand from China and a roadmap for its quantum computing plans. Karen, no doubt part of the run-up this week, at least, was anticipation of this major potential catalyst.
Right. But what I think, I don't know if he's going to address this, is how is demand right now?
Right.
For what's going on.
Has anything turned?
Yes. Has anything turned, and having a little bit more time, not a ton, but a little bit more time post-DeepSeek, do you think the world has changed? Stacey Raskin, I don't know if you heard him on in the prior hour or two, was saying he thought DeepSeek was a big positive. But clearly, the street thinks differently. I'd be very curious to hear Jensen's take on that, which I know he's saying inference is we need so much more compute for inference.
Yes.
Right. And so he, is touting that as a positive, which there's skepticism, though.
Right. Tim, you got your voice back?
Let's hope so. This has been a tough run here. Yes. What can I do for you?
Nvidia and GTC. What are you expecting?
I do think this is an important moment for the stock. We got numbers, as we all know, a few weeks back, and those numbers were fine. But as we think about the drivers and what the DeepSeek impact is, there's no question that still Nvidia is the only game in town. And I still think that CapEx spend is not something we should be challenging. GTC is going to be another data point, and I think it's important for the market. I like what the stock did on the chart this week. It was really important.
Do you remember when NVIDIA reported earnings, John Ford had a one-on-one interview with Jensen Huang after that report? And we were saying, Jensen Huang, he's always managed to come out and message the markets and stir the stock higher, and nothing happened. So what do you think this
he's been an excellent salesperson for the name. I think this will be one of those Apple events where you sell it, on the day of, or you sell it coming out of it. But what I thought was interesting is they're having their first ever quantum day. And if you look at stocks like D-Wave, that was up 47% today. If you look at Rigetti, that was up 28% today. So watch those names out of it. They're trying to change from AI to quantum. I think that's very interesting.
How does NVIDIA stack up in your Mag 7 list?
Well, they're really dependent on your other Mag 7, right? Because what you need to see is the CapEx from these other companies need to continue to increase, which interestingly enough did even after DeepSeek. They pledged even more money to go back to chips, which has been a positive for NVIDIA. So I think you want to watch not just what they're going to say at this conference, but also is that CapEx going to continue to increase, especially if there is concerns about growth in the economy? Are they going to pull that back?
With its GPUs and CPUs, NVIDIA, a full-stack computing infrastructure firm, is at the forefront of AI technology. Atif Malik, a Citi analyst, kept his buy recommendation on the stock with a price objective of $163 on March 12th. Based on NVIDIA's strategic posture and impending product breakthroughs, Malik has given the company a buy rating. The expert pointed out that enhanced inference performance is anticipated with the release of the Blackwell Ultra and Rubin CPUs. According to the analyst, the stock is currently trading below its previous price-to-earnings low, which presents an alluring risk-reward opportunity. Additionally, NVIDIA has reduced the risks related to its sales exposure in Singapore and China. In 2025, the company's revenue increased by 78% year-over-year to $39.3 billion in the fiscal fourth quarter. Notably, its data center sector achieved a record quarterly sales of $35.6 billion, growing 93% over the same period. For the next 10 years, NVIDIA is among the top growth stocks to buy. Because the business had spent years establishing a solid foundation in accelerated computing, NVIDIA was able to ride the artificial intelligence AI wave that ChatGPT had started in late 2022 and dominate the market for AI accelerators. In addition to AI workloads, NVIDIA's GPUs are beneficial for simulations and other computing-intensive jobs in academia and industry. NVIDIA's proprietary software toolset, CUDA, has been in use for about 20 years and enables developers to take advantage of the company's GPUs. When the AI boom began, NVIDIA had a huge advantage thanks to the extensive ecosystem surrounding CUDA. With startups and tech giants vying for supremacy in the AI race, NVIDIA's GPUs were the easiest way to stay ahead. Customers of NVIDIA had no incentive to invest the engineering resources required to break free from their reliance on CUDA when the market for data center GPUs was significantly smaller. There simply was no return on investment. The math is beginning to shift as the demand for data center GPUs soars due to the AI boom. In the most recent quarter alone, Nvidia's data center division brought in almost $35 billion, and the company's profit margins are skyrocketing. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
We've got the Super Bowl of semis coming up next week with NVIDIA's GTC event. It's quite possible they give some commentary, some insight into what's happening in 26. But I think for the AI trade, what is absolutely important is, do CapEx budgets go up in 26, and what's their conviction of that? If that's the case, if 26 budgets are up, the AI stocks will all be up.
Just thinking about end markets, Chris, gaming, auto, PC, mobile, data center. It feels like data center's going to have to carry a lot of water, is it not?
It will, and it does. And again, from the broader space, what you're hoping for is, we finally get this cyclical recovery. And what happened in semis is, post-pandemic, customers just built up way too much inventory. People were just too optimistic. And it's taken 2 years to get to the point where, for example, Analog Devices said in their earnings that we think we're finally through the inventory correction. So if you do get some GDP help, some macro recovery in the second half of the year, well, then you get two benefits. This is always the benefit of a positive semi-cycle. You get, improving demand, and then the fact that customers have to put inventory back on the shelves. Auto is another example where some of the tier ones in auto have taken their inventory all the way down to 2 weeks, where, 2 years ago they said, we'll never do that again. We'll keep our inventory high. We don't get any shortage. And now they've gone the other way. If you start to get some better feeling about end demand, well, they have to put that inventory back into place. And really that's the concern. And frankly, a couple weeks ago, before some of the trade and tariff scares, there was a lot of optimism for that being the case.
What do you think Jensen Huang says at GTC, Chris? And I'm wondering, were there any unanswered questions after NVIDIA's earnings call that you unanswered at this event?
Yeah, so most of what GTC is talking about their particular product cycles. One of the things that was at least a question after earnings was, you didn't see the level of upside in NVIDIA's guidance that we've seen in the past. I think they did answer the question. It's about the transition to the new Blackwell cycle, and there's some new products coming out. We're optimistic with that in the second half of the year, and I'm very confident that he's confident in that as well. But what people want to see, the conviction people want to see is, does this continue? And really kind of two things. One is, what kind of ROI are NVIDIA's customers getting on the money they're spending right now? And then secondly, the level of conviction that that spending, the CapEx, is going to go up in 26. That's really what people want to hear.
Are you above or below consensus when it comes to their 25 margins?
Well, we're above with regard to the 25-26 with regard to earnings. For margins, they've had a little bit of a downtick. Again, it's associated with that new Blackwell ramp. So generally what happens with NVIDIA is when they launch the new product, gross margins come down a little bit. Management's guided that to be back up in the back half of the year when, the new Blackwell becomes more mature. So margins were...
As they compete to meet the demand for AI computing capacity, clients like Microsoft, Meta Platforms, and OpenAI are spending billions of dollars, or possibly tens of billions each year on NVIDIA's GPUs. Now the stakes are considerably higher. By eliminating NVIDIA and creating its own AI hardware and software stack from the bottom up, a business like Meta might save billions of dollars. There seems to be a growing movement in the tech sector to bring AI accelerators in-house. Several generations of specialized AI chips have already been developed by some firms, such as Alphabet and Amazon. Now more businesses are doing the same. According to reports, Meta is testing a customized AI chip for workloads involving AI training, which require a lot more processing power than workloads involving AI inference. Not far behind, OpenAI is said to be completing the design of its first proprietary AI processor. Businesses who create their own AI processors and lessen their reliance on NVIDIA's expensive AI accelerators may be able to outperform rivals that don't take the same approach in terms of cost. This might force even more businesses to develop their own AI chips. In the market for AI accelerators, NVIDIA has some competition from AMD, but its own clientele poses a much greater risk. These days, the statistics are significant enough to make tech behemoths and AI firms reconsider their stacks of AI hardware and software. This tendency may put pressure on Nvidia's price and profits in addition to decreasing demand for the company's chips. The only reason the CUDA monopoly on accelerated computing is being challenged is because the market for data center GPUs grew so big. As long as the AI boom persists, Nvidia will continue to sell high volumes of AI processors. Growth will be difficult for Nvidia if its market share declines as a result of competition from domestic AI processors. Once the need for AI computing power slows down, after all, trees don't grow to the sky. As anxieties about tariffs and the status of the global economy have clashed with concerns about the resilience of AI demand, Nvidia's stock has already fallen from its peak. The stock may see more pressure as the market for AI accelerators becomes more reliant on custom AI processors. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
So, it's called the unbalanced butterfly. So, I went out to the April 11th, this is in Nvidia now, I went out to the April 11th expiration. So I'm giving myself a fair amount of time, 28 days. So basically 4 full weeks. I bought the 120 call, which is the at-the-money call. Then I looked at the expected move for out there till that day, and it's about $15, okay? So I said I sold 2 of the April 11th 135 calls. So the 120, 135 call vertical on. Then against that, I sold the 135, 140 call vertical to complete the unbalanced butterfly. So long a $15 call vertical, short a $5 call vertical, with the equal strike being the 135 strike, in line with the 1 standard deviation move for that period. I put the debit in about $4.35. It traded about $4.50 as the market is firming up here and rallying. Remember, Nvidia has their GTC conference in San Jose from March 17th or 18th to the 21st of next week. So make sure you're watching. They'll probably make news in one way or another from there. So this is a bullish 4-week unbalanced butterfly. What do I mean by unbalanced? Long a $15 call vertical, short a $5 call vertical. That's what I mean by unbalanced. And if you see that the risk on this trade, still with any butterfly, the risk is the debit paid. So you're looking for a move towards that short strike of $135.
In a recent appearance on CNBC, Chris Grisanti, the chief market strategist at MAI Capital Management, stated that the market is moving away from growth stocks and toward value stocks. Choosing a great firm is important, but so is choosing a terrific entry price, something that many investors overlook. Additionally, growth has exceeded value by the greatest amount we have ever seen, which has caused the valuation to completely swing out of balance, especially in the last few years. We're just sort of getting back now. The most recent sell-off is not the healthy correction we have seen in the past, the analyst cautioned. In a recent broadcast, Eric Dighton of the Wealth Alliance stated that Nvidia's stock dropped following its earnings because consumers are interested in knowing the names of certain clients who are paying boatloads of money on AI. The earnings exceeded all expectations and came out quite well. Nvidia's demise indicates that even a beat could not be sufficient when stocks have experienced such significant movements. They did, however, lose by a smaller margin, and people have become weary of hearing Nvidia boast about how wonderful everything is. Customers are what they want to hear. They want to hear Microsoft, Google, and Amazon promise to spend a ton of money. Regardless of what some may argue, DeepSeek undoubtedly caused a slight ding in the armor. There should be a lookout below if stocks have made such movements, and then you suddenly wonder if the growth will proceed as anticipated. The market will continue to penalize Nvidia for failing to meet its enormous and even irrational growth projections. Large cloud providers, who account for around half of the company's revenue, are reconsidering their strategies in light of DeepSeek's launch and searching for less expensive chips. Compared to its prior 12% QOQ growth, Nvidia's Q1 projection indicates a 9.4% QOQ sales growth. It is anticipated that its adjusted margin will also decline significantly to 71%. When Nvidia doesn't report a solid quarterly beat, the market does not like it. When the company reports poor growth in the upcoming quarters, the stock will continue to be under pressure. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.